Hi YouTube, please give me a moment while I connect to Facebook. We'll be getting started in just a minute. And I think we should be live on Facebook. Hi everybody, welcome to the Strategic Swing Trader. I am Sami Abu Saad, Director of Education at T3 Live. Hope you're doing well. We're going to review the market and go over some amazing swing ideas for next week. But before we start, as always, a standard required disclaimer to let you know that trading is risky and that whatever we discuss is for educational purposes only. As always, if you'd like to download a copy of my free ebook, link for that is in the description below. Also, I dropped in the description a list of the stocks that I'm going to be watching this week. Today, I'm going to go over about a dozen or so bullish watches, half a dozen maybe short watches, but I have probably over 70 watches in the description, so make sure to get that list because it has some amazing ideas. As always, also, if you find benefit in today's video, I would appreciate it if you hit the like button, and if you have any questions for us, be sure to reach out by emailing us at info@t3live.com. Again, info@t3live.com. For now, we're going to go over the market and then we'll go over the swing ideas. So the market, kind of an easy call. So check it out. So that's Friday, Thursday, on Wednesday. Okay, when Powell spoke. So that was a very, very, very bullish bar. Okay. Now the thing about bullish bars is they are wonderful. Okay, as long as they produce follow through. If a very bullish event or bar doesn't produce follow through, or in fact it is completely negated, that only goes to show you how bullish the market really is. So one more time, bullish bars are really wonderful, but only if we get follow through. Okay, know that one bar events not followed through on tend to produce strong opposite moves. So we didn't see any follow through. The very next day we got a doji bar. Notice over here we had a big green bar, and then the next day we followed through, so with another green bar. So that's what you want. Now in this case, it's not the end of the world. We got a doji bar. Now let's see if we can get a 1 2 3 and produce follow through on Friday, and we didn't. We had a gap down and it got bought. So now the question is, will we continue higher? And if so, then the bias should be bullish. Okay, if not, there are two lines in the sand, so to speak. One would be under Friday's low. So that would be, if we take out Friday's low, that would be the first sign that this really bullish bar that we got on Wednesday is not going to produce follow through. The other would be to wait and be patient until the pivot fails. Okay, of course, if we fail on this pivot, if we negate that big green bar, that would be pretty bearish, and it would also signal the start of the sell-off on the weekly chart. The weekly time frame has been in a downtrend all year long. So if we take out the last 2 weeks, the low from the last 2 weeks, which should coincide about the same price or number as that wide range green bar's low, slightly below it. So if we take it out, that would signal the next leg down is underway. So notice, you see what I mean? So that would be the next leg down. Now, if we, so if we take out Wednesday's high, or no, not Wednesday's, Thursday's high, then no, I would be bullish. So again, bullish is easy, over Thursday's high. Bearish, you can be bearish as soon as Friday's low gets taken out, but that wouldn't be the safest way to do it. But it would be the more aggressive, more rewarding, because you would have a tighter stop. Or wait until this base or this pivot right here in particular gets taken out. Up to you. But bearish, we have two lines in the sand. Bullish, only one line in the sand, which is Thursday's high. I'm actually long 1,000 shares of the SQQ. And you might think, don't we have an uptrend? Is price not moving up? Yes, it is. but I have too many long positions. So as a hedge on Thursday, I noticed the futures were dropping right after the close. So I went long 1,000 shares, which isn't enough of a hedge. But don't forget, we've been bullish. So it isn't really enough of a hedge. I went long 1,000 shares of the SQQ. So now if we take out Friday's high, I will definitely kill the SQQ, which is the inverse, triple leverage inverse ETF of the Qs, meaning it'll have dropped. So we'll see. We'll see. It's not an easy call. The same with on the SPY, the same on the IWM. The SPY is the strongest, followed by the IWM, and the weakest would be the Qs. All right? So that's the market. You always want to work, with reference points. So you create lines in the sand, so to speak. If price crosses over this, this number, then I'm going to be bullish. If the stock or the Qs in this case drops below this number, I'm going to be bearish. So you're always working with reference points. That's the professional way to do it. Okay, not blindly say, okay, I'm bullish no matter what happens, or I'm bearish no matter what happens. You see what I mean? So that's what I always do all the time, every day when I analyze the market. I'm always figuring out the support and the resistance lines. Here's some bullish watches. Again, I have over 70 items, maybe 80 bullish watches in the description of the video. But I can't go over 80. It'd be an hour and a half long video. So here's what I got. Some of the retail stocks, they all look alike. Like Abercrombie and Fitch also looks exactly the same as the ANF. Basically a gap after earnings and a base breakout. So it looks pretty good over the base, stop under it. Okay, the same with AEO, same exact. So whichever one you like. And then there's also Macy's, that looks good. I don't know what else. Just check out the retail, especially the apparel stocks. They all look alike. So I have the AEO on the list. AMLX. This is a little bit different. This is just super bullish after a really, really strong gap. See the gap up? Very strong gap. And it went higher, and now it looks higher over the base. Stop all the way down here as a long-term play. Some people with small accounts need to turn over their plays quite frequently, meaning they can't hold long-term. It has to be, 1 or 2 days and then out, so they can take advantage of the next play and then the one after. So this wouldn't be something I would expect to be out of quickly. Okay, so that's the AMLX. BHC, I took a stop on it. I don't know when, maybe not last week, but the week before. I raised the stop to this bar's low. I was in it long from like a couple days earlier. Raised the stop to this bar's low. Stopped me out exactly to the penny. I believe it was, maybe not. No, it wasn't. I raised the stop to 67. So it stopped me out by a few cents. Went back up. It's looking higher. So BHC over 825. Stop under this bar's low if you want the tightest stop. Widest would be down here would be under $7. It just depends how aggressive you want to be. The tighter stop gives you bigger size. You can put on bigger size, and as a result, you can make more money if it works in your favor. Now, the tighter stop also leads to more stop outs because you can easily get shaken out because you're using a tight stop. So tighter stops, more money if it works, but lower odds of it working. So better Sharpe ratio, worse lower batting average. You got it? So it's a compromise basically. You can't push it too much. You can't always go with the tight stop, but you can't always go with the wide stop. So it's a balancing act. The plays that look picture perfect, I always go with the tight stops. The plays that look a little bit iffy, or I'm not so sure about the market, I use the large stops. You see what I mean? And different from play to play. So the BHC 5 is a 1, 2, 3. So long over Thursday's high, which is 188.67. Stop under 179.90. So it's a 1, 2, 3. FCX, I actually had a call on it on Friday as a 1, 2, 3 play, meaning long over that bar's high, stop under it, but it gapped down below the stop, so that immediately negates the play. And it ran up all day and then it went higher. So it looks good still, but now it's a bigger stop. rather than use this bar's low, which was only 38.71, now it would have to be 38.44, and the entry would have to be over 40.30. Okay, looks beautiful, looks higher, but it needs to take out Friday's high, stop below it. GLYC, I mean, this thing is a rocket ship. Now let's take a look at the weekly chart on the GLYC. That's a 1, 2, 3. Now it's coming after 2 green bars. Ideally, you want to see the doji bar come right after the initial igniting bar, but it definitely looks higher over the high here, over 250. Stop down here, target 1 there. Maybe it keeps going. It just depends on what kind of market we are gonna get, okay, on the going forward. So that's a GLYC. LW is at the all-time high, and it's just so bullish. The 20 is a little bit flat, so that's what I don't love about it. Long over the all-time high, stop under the pivot, okay, on the LW. Let me just fix the chart real quick. Okay, there we go. So the stop would be under 84.50, and the entry would be over the all-time high, which is about $88, $87.75. PCG would be also a long-term play. Like off the weekly chart, it would be over $16. Stop under 14.40, I think, 14.30, 14.32. So over 6. Why do I like it? I like it because of the monthly. Is it transitioning on the monthly chart? It's like the FTI, which is an open position in the newsletter, but I don't have it. I accidentally exited out of it. It's working out beautifully. See it? FTI. So PCG is not an oil stock like the FTI is. It is a utility company, but it looks good. PCG. POL is I don't know what kind of a company it is, but it's a breakout. So over the it's a penny stock actually. Over 80 cents. Stop under 66. Target about $1, maybe $1 plus. $1.10, 15. So it's got enough reward to risk. So I like it. PRQR, I missed a good entry on it over that tight base. Why? Because it just wouldn't go for a long time. So I didn't think it was gonna move. So here it is. For a long time, it just wouldn't move. So I passed on it. Now it has almost like a 1, 2, 3, 4. So long over that bar's high, which is 142, stop under 113, and has a lot of room. So it would just have to be managed on the way up, but really has a lot of room to go. PRTA is the definition of bullishness. Puts in a really large gap and rallies after the gap and never fills the gap. Never trades back down into the gap fill. So this is the gap fill, or that's the gap. Never trades down, stays bullish at the highs. So I like it over the highs, very wild. 60, 650. Stop would be, the tightest would be down here. It's a big stop, but it looks amazing. I did play the PRTA. I don't know if it was last year or the year before, during the pandemic. Let me see what kind of time scaling I'm using. I just want to show you what it looks like on the monthly, what it looked like. I mean, what an amazing chart. I called it long in the newsletter, over 15 bucks. I got out multiple times, but I wish I had kept it. It went to 70 or 80. Look at that over here. Amazing. It had a gap up too. Okay, and then it went up, and then I got out on the initial pop, got back in it, got out again. If I had just never touched it, I would have been better off. It collapsed and went right back up. Guess what? This is probably higher long term. Probably higher long term. The PRTA. Here's the, I don't know if I can go back that far without adding more data. This is the gap. Here it is. Remember I told you it was about 15 bucks. There it is. It gapped over multiple red bars, base for a couple days. You're gonna see it. And then the call was over 15. Yeah, so my memory served me right. The call was over 15. Stop was under probably 13.50, and it just went up. And I got out of half on the initial play, on initial move up, and I don't know where I got out of the back half. And went up again, and then it came in hard a little bit. I thought it did, and it ended up going to 80 before the whole market crashed, before it came back in. Roku may be bottoming. Check out the Roku. Gap down on earnings, put in a huge volume bar, and then it got bought. And then it's looking like it might have bottomed. So over $62, the stop, the best stop would be here. But as you can see, it would be really large stop. in which case you couldn't put on too much size. Okay, so it would be over 62 by 51. The tight stop would be under 57.80. This bar is low, which is Thursday's low. Up to you. So it looks nice on the daily. It looks similar to the W also. W is one of those stocks that dropped 90% but hasn't really rallied much. The same with Roku. Everything else is rallied with the market. These two haven't yet. So check them out. Long on the Wayfair over 44, or can do half over Friday's high, half over 44, and then widest stop, which is the safest, would be under the base as a longer term play. W and Roku look very much alike. Schwab is already in an open position in the newsletter, looking to add to it over the highs here, stop down here. Okay, looks good. And then if you look at the weekly chart, it looks beautiful. But Schwab is not a biotech, or it's not a small cap stock. It's got to take a while to get up to 90 bucks, 90 something. That would be the target. But it looks beautiful. As long as it can take out 82.70 or so. Okay, it needs to take out 82.70. STNE looks amazing on the weekly chart. It does need to take out 12.40, 12.50. So higher over the base. Stop, I would say, under $10. Or let's go back to the daily chart. Yeah, there isn't really a tighter stop. It's $10. Tightest would be here. That would be too tight because it's not even, it won't even be under the 20. So I would use $10 entry over 12.50. Long-term play. STNG is not a gold shipper, an oil shipper. Amazing. Not just the STNG. There was what else? That's a gold shipper. Very, very bullish. I don't remember the other one, but there's two of them that are breaking out to all-time highs. So over the highs, stop under. Okay, looks amazing. Look at the weekly on this. Just a very, very tight uptrend. Beautiful. W we talked about. W day gapped up on earnings. We have a 1, 2, 3. So over 171.30. Stop under 164.40. And it looks like it bottomed. It's one of the few that haven't also rallied really hard. It's workday. Looks higher to 200. Of course, it's gonna all depend on what the market does. And we have those lines to, resistance, support lines to pay attention to work with tomorrow. So that will determine whether most of these trigger or not trigger, fail maybe. XYL, I like the weekly. The daily is not so good, but I like that shakeout bar. Tried to break down and then it got bought, turned into a bottoming tail bar. So over that little shelf, stop under the bottoming tail bar and target about 130. So it definitely has enough R to R. Definitely does. And then last but not least is the YEXT. Now the YEXT, the play on it should have been right here. I had a call on it and then it came in and I canceled it and then it gapped up. So that's when I had the call on it, but it didn't trigger, came in and then it gapped over my entry. So that, unfortunately, that would have been the perfect entry. Now I'm not in it, but I'm looking to get in it over not $6.50, stop under $6 as a 1, 2, 3. Lovely weekly chart. So that's the YEXT. Did you guys get long the 20-year treasury, the TLT? Remember I talked about it last time? Showed you the monthly, last week's video and the week before. Showed you how we dropped to all that support, climactic. Pretty good if you did. It's up a lot. It got to target 1 on Thursday, I believe, maybe Friday. But I'm keeping it as a long-term play. Also the China stocks. Remember China? We've been talking about it. Looking good, but no jinx. I hope they work out. That's almost all I have in my IRA account. CWeb and the yen. Almost all I have. I do have a bunch of the Chinese stocks in my swing trading account, but the IRA, I have a couple other things. I have Guild also in the IRA account, long-term play, but the bulk of it is in yen and the CWeb, which are the leveraged ETFs for the FXI, for the China, ETF, okay? And then the CWeb, I don't know, it's the technology sector. It's the leveraged ETF for it. Here's some shorts. CM 1, 2, 3. So short under 43, 44, 50. But because it dropped a lot on Thursday, I don't know about putting the stop right here. You might want to give it a little bit more room, just because when it drops a lot on day one, I don't like to do 1, 2, 3. I like to wait for another day. Like I like to wait for 1, 2, 3, 4. So 2 resting days. Again, can put the stop here, or if you want to give it more room, about 45.75 on the CM. CRM was a very, very bullish stock, and it just crashed and really looks slower still. It's one of those big names that was just doing amazing. Look at this, the last decade or two, I mean decade and a half, amazing, and then it crashed. Still looks lower. So like it short. I don't like the congestion over here. So notice how there's traffic, there's support to the left. So that's what I don't like about it. I do like kind of the double bottom. So there's the second bottom, here's the first bottom. So if it breaks under both, that would be pretty bearish, I think. And then stop over either over Thursday's high or Friday's high. Obviously the tighter stop is always more aggressive, and it would be a long-term short. Fitch crashed completely on Thursday. Friday put in kind of a narrow range bar. So if it breaks under it, I think the Fitch is going to require, it's not going to break down on tomorrow, might have another day or two sideways days, and if it does, it will get even better. So short under, stop above. On the Fetch, PAGS, check out the monthly on the PAGS. I mean, look at the larger time frames. It just broke the recent support, and it's basing at the all-time low. Looks lower. Look at the daily also, it's a base. So I like it short under the base. It's a sloppy base. There's 2 places to put the stop. If the market is bearish and you want to be aggressive, right here. If you want to be conservative as a long-term play, up here. Entry, we know what the entry is. It's under Friday's low, and give it a few cents below, usually, is what I do. So we know what the entry is. It's the stop is, you know, is the thing that we have to make a decision about. Either the tight stop over 984 or over 1060. Okay? RUM also 1, 2, 3, short under 850 by 908, and target has room to $7. So it does have good R to R. Now, if you place the stop up here, you would lose the R to R. It wouldn't even be good enough to play. STOK is a base breakdown, so under the base, stop above it. Looks good, but I think it's pretty thin. Yeah, it's at all-time low. This is a bearish stock. Stoke Therapeutics, okay. TELL. So, okay, I got it. Those 3 are all oil. And oil, in my opinion, and I've said this before, topped out long time ago. So check it out. TELL on the weekly chart. That looks lower. And then daily has a 1, 2, 3 and a base breakdown. So under 244, short. Stop either right here or up here. There's 1, 2, VET, 1, 2, 3. So stop can be entries under 19. Stop is either over 1951 or safer, which is what I would go with, 2025. Okay, and then last but not least is XOM, which entry right here, stop right there. That would be the most aggressive of the 3. Look at the monthly on it though. So if this is the top, yeah, look at the monthly. Just want to open it up, show you the monthly chart, and then zoom out a little bit. Wow, look at the move from 30 to 110, 120, and it's getting the reversal bar. So under it, stop above. Or if you want to use even a tighter stop, under the daily base, stop above it. You see what I mean? Or under the monthly bars low, and then target about $90. So okay, on the XOM, this would be again the most aggressive of the 3. But those are 3 oil stocks for you. All right, that would do it for today. I do hope you enjoyed today's video, and if you have, please be sure to hit the like button. If you're not a subscriber yet, please subscribe, follow us so you can get the latest videos. And if you have any questions, be sure to reach out, info@t3live.com. I'm Sami Abasad with T3 Live. Good luck with your trading next week. Take care, everybody. Ciao.